in your view, are recession fears overblown, underblown? Where do you expect the possibility of a soft landing to hit?
Well, good morning. I don't necessarily think they're underwhelming. I mean, when I look at the big picture and what the comments are in the recent article in the Financial Times over the weekend, we're looking at some fairly big, I think, announcements with where we're looking for as far as numbers. And over the next, 4 to 6 months, there's a big chance you go to see, 15 to 30% recession. And if you look at over the next 2 years, it could be 50-50. So it's putting a lot of fear as far as sentiment, and that's creating, I think, again, opportunity.
The pullback when it comes to oil, the first back-to-back weekly loss since early April, do you see this as a significant pullback? Is it sort of just temporary given that the fundamentals still see prices pushing and inflation for energy pushing higher?
Well, there's no doubt about it. But we've seen those big whipsawing over the last couple of months, and that 100 to 120 band seems to be a constant. And we pulled back relatively hard last week, and then we saw a big move as far as Friday. I thought that was a strong move to the upside. We've seen a little bit of a market pullback over the last hour or two. So I think it'll remain in that 105 to 115 for Brent sort of number and crude and WTI a couple of bucks less than that. So again, wild whipsawing and hard to put a number as far as where we're going to see value.
Do you expect to see anything on stabilizing energy prices out of the G7, and what implications would that have, not only, of course, for inflation, the commodity space, but more specifically FX as well? We have seen the Japanese yen, of course, under incredible pressure given that they're a huge energy importer as well.
Well, exactly right. We're running at that 134, 135 handle. They're saying maybe a 145 is the line in the sand for the yen. But as far as the G7, there are major concerns. We've seen a collapse as far as base metal prices. So are we going to see a follow-on as far as energy? That may be on the radar. You might see, it may come back and we might be an $80 to $100 handle, over the next, say, 4 to 5 months. But the uncertainty is still there as far as what the impact is to high energy prices and what it's doing to the global economy. And that's really the concern that I think most traders are worrying about, and certainly on Main Street, high energy prices.
And perhaps if we do see a little bit of an easing on energy prices, perhaps some breathing room for Europe. This GTV chart on the Bloomberg just showing how Europe's June PMIs all missed estimates. And I keep speaking to analysts and they seem most worried about the economy there. What do you think?
Well, I think exactly right. The fears as far as big recessionary fears running across Europe, the concerns as far as inflation, and do they hit double numbers? So double digit. You've got a 105 handle for euro dollar at the moment, and there's everyone's on their radar as traders over the next, say, 6 to 8 weeks. Are we going to see a 103 or even a 102? King dollar seems to reign supreme. So that's where a trader's looking at as far as the retail sector. So I think that, the softness leading across that eurozone over this summer period is going to be tough.
Peter, when it comes to the Aussie dollar, there's competing factors, it seems, because on the one hand, you've got a recovering Chinese demand story, you have the energy and resources boom, the commodity cycle. On the other hand, it doesn't do well when it comes to downside for risk, right? What is the stronger catalyst?
Well, I look at, Main Street in Australia, and there's certainly inflationary fears, and you've got a 69.5 handle for the Aussie dollar. So it seems to run between that 68 to 71, 72. It's very, very wild volatility, and at the moment it seems to be a little bit subdued. So there's talk as far as where we move forward. Many traders are saying we're going to see a 71, 72 over the next couple of weeks. So I think that's really, we're looking at Chinese data. We're appreciative as far as the big global themes. And it's just a market that certainly doesn't disappoint as far as volatility and opportunity.